On today's show, you'll hear investor perspectives on the COVID-19 impact on the cannabis market. This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. It's the time of COVID-19. Cannabis is currently gaining regulatory approval across the U.S. The lockdown has declared certain sectors, including cannabis, to be an essential service. We have investors and startup founders describe the impact of COVID-19 on the cannabis market. I hope you enjoy this episode. My first guest is Matt Nordgren of Arcadian Capital.
I think it's most important to cover the collaborative nature that we all need to have at this point in time. It's obviously a big issue in the world, but this industry sort of lends itself to that point. And I think even economically speaking, the industry is growing at a 35 to 36% compound annual growth number. This is very big, everybody. It's very big. Don't shoot yourself in the foot along the way. Work with other people. You don't have to be the first. You don't have to be the best. Be a part of the movement. It doesn't see color or race or anything about you. You know, it's a molecule and it's natural. So all I can say is if you look and listen to the world today, you do what you can. If you're in this industry, let it be a lesson. We have an opportunity to build an industry the right way from the beginning. ESG, with minority lives that matter, with female empowerment initiatives that matter, with environmental concerns that matter. Everybody else is trying to reverse engineer something that's already big and going and trying to make it better. We have that luxury actually to make sure that as this thing keeps getting bigger, because it's going to, that it's done the right way. So I just want to encourage, thank you for asking that actually. If I can do anything is encourage people to work together because it's already going to be big enough. Just make sure you're a part of the ecosystem, the whole story, and not on your own.
My next guest is David Hess of Trust Capital. And so based on what you saw in COVID-19, how did that change your investment thesis for the sector? What were you doing differently?
I'll tell you, we're not doing that much differently post-COVID. I would say for the months leading up to COVID, certainly there was a focus on fundamentals leading into the sector, right? Whether it's cash flow, governance, exits, and ROI for the investor, with a more sophisticated answer than we're going to go public, because that's more of just a transition, not a true exit. And maybe it provides for some liquidity potentially for an investor. But I think we, want to see, as equity investors, how we're going to see a return. But for the most part, it's really a return to fundamentals. We're going to focus a lot more ourselves on who's on the cap table, both from inside the industry and without the industry. Not so much as a FOMO thing, as you might think, but for more for us as who is going to share in the responsibility of supporting the organization until profitability, right? Or even once they are profitable, you never know if there will be another COVID-19. Will COVID-20 be here? And what's that going to do to cash flow? And, a lot of times, even very, very good operators will lean on their investors for support during those times. And we want to understand who's going to be there with us.
Well, during the pandemic, we heard a lot about the use of AI for healthcare, searching electronic medical records, searching through clinical trials. How do you see AI coming into play in the cannabis space? Where would it be used?
So it's a great question, Hal. We're already using AI. One of our portfolio companies called Grownetics is doing exactly that. And if you're an indoor grow facility, especially, every penny counts. And it never made sense to me that different strains, right, were requiring the same amount of nutrients or the same type of nutrients or the same lighting. And over the past few years, a lot of cultivations have begun to use different forms of lighting, different types of nutrients to deal with that. But what Grownetics will actually do is go in and regardless of what sensors are already being used in the facility, we can go ahead and provide those sensors or tap into the sensors you're already using and essentially monitor that grow using AI. You can opt in as a grower. If you want to grow Blue Dream, for example, the same way that a grower in another state grew Blue Dream under similar conditions, you can do so with the push of a button and gather literally billions of data points while you do so. So at this point, it couldn't be more important to have AI being incorporated into cannabis, into cultivation, into processing, and really across most sectors in this space, there's a vital use for AI.
Another area we saw that might shift is the supply chain. Most supply chains were set up with just-in-time inventory systems, the absolute most efficient. Everything just arrives just in time. But in a pandemic, things don't go as planned. And it seems like there's going to be a shift to a robust supply chain. You always get your product. It may have extra in the pipeline, but that's okay. We just want to make sure the product keeps coming through. We saw a lot of interest in supply chain visibility systems. What is where? When is it coming? Do you see anything like that coming up for cannabis?
Sure. Whether it's supply chain optimization and really getting better at forecasting, I don't know if we're going to completely eliminate the distribution channels from outside the US, although I would love to see most, if not all, products made in the USA. I just don't think that's a reality anytime soon. I think we're going to see more of a push towards that. But for some product, currently, it's still impossible, right? We still have to rely on companies outside of the United States to provide us, with those products. And so what we are starting to see is, operators reliant less on one or two suppliers and are prudent in that they've got a whole list now, and they're not just located in China, for example. They're located globally, and so we're seeing a lot more in the ways of preparation. But it's a serious issue, and hopefully we minimize the disruption and future events as a result. I would say, advice to investors that are participating and listening on the podcast would be, now is as crucial as a time as ever to really tap into some of the value add investors in our space and make sure you've got them in your Rolodex or on your speed dial, and tap into their knowledge, tap into their resources, and don't go at this alone. Right? We don't have 30,000, 40,000 person conventions these days like we had pre-COVID. And so now more than ever, if you're going to be doing diligence, it should be done with with somebody like a Trust or somebody else, that has been making investments for a number of years in the space and really understands the different sectors and the different variables. Without that, I just see too many pitfalls. So that's from the investor side, number one. From the entrepreneur side, like we were talking about earlier, focus on those fundamentals, number one. Number two, and when you're looking for investment, friendly advice, don't ask for an NDA before an intro call. I see that often, unfortunately. And, just think about it from our standpoint. We literally have to hire in-house counsel to review NDAs all day long, right? And that's just not beneficial for anybody. On those first few phone calls, just if you don't feel comfortable, don't share anything proprietary, right? But don't ask somebody to sign an NDA before you've gotten to know them, before there's any real interest in investing. And on both sides, maybe you don't want them as an investor. So get to know the investor or potential investor first before you ask them to sign an NDA, and vice versa. And just don't put any stumbling blocks that are really unnecessary, before an investor. I hear we speak with a lot of the value add investors in the cannabis space very often, and there's a lot of dry powder available for operators. And so it's going to go to operators that are running good businesses, right? And are open to being collaborative, understand how to pivot. And I encourage all those participating on this call and that really listen to the podcasts how to find a partner in the space that can, such as yourself, that can really help guide them through the process. That would be number one.
And my next guest is Marcus Estes of Chromasignate, a technology company in the cannabis space. Well, you talked about the dispensary businesses being hurt a little bit in the COVID lockdown. What else was negatively impacted? It looks like everything's growing greatly for cannabis, but typically it's uneven. Some things are growing well and some are not.
Yeah, the sad fact of the matter is that if you look at the aggregates, I think we're going to see, it looks fine from a distance. But what we're actually seeing is consolidation. And what that means is that the companies that had enough of a balance sheet and enough of a regular supply chain to stay on the shelves were purchased. But it is the brands that I see looking at the manufacturer level, which I have kind of a bias towards because that's who we sell our product into primarily. I think what we're seeing here is worrying. A lot of the smaller brands, you could say there are growth opportunities, but also just those that are trying to run smaller artisanal businesses, which oftentimes produce, by the way, great product, right? A lot of time, if you really want good cannabis, a lot of times looking at smaller batches, this is like beer, right? You go look for your microbrews, right? A lot of the microbrew-esque vendors and manufacturers have had difficulty, not because the demand isn't there, but because the supply chain is still it's a jagged and complicated beast, and it's easy to cut yourself on it. There is a lot of improvement that needs to be made to the cannabis supply chain in order to have smaller operators easily scale into it and grow. And I think some of those smaller companies, it's really twofold: access to materials, ingredients, and importantly, the financial inputs needed to make that happen. I would say that a huge story here is that even though that, consumption is good, a lot of the private capital that was propping, because we don't have institutional bank capital in cannabis because, it's kind of a scary regulatory thing. So we've relied upon angel investment and upon private capital to prop up a lot of the supply chain operation. And because some of that capital got a little bit gun shy for good reason right at the beginning, people that were in the middle of closing deals, some of that stuff went south, and that immediate aftershock has been a little bit damaging, I think, to the smaller purveyors in the market.
Well, it sounds like that's a good opportunity for investors on the private side is to come in and fill that need. It sounds like there's quite a bit of opportunity there. Would you recommend angel investors to go in and invest more heavily? And if so, where?
Here's the thing. I would offer a lot of caveats there. I think there are some tremendous opportunities in cannabis right now. Now, here's the thing. From a naive perspective, when you stand 20,000 feet away, we had a wave of speculative investment starting around 2017, 18, where everyone thought, well, it's a green rush. I'm just going to find the closest person that my cousin knows and I can't lose money. Well, now I would want to start with this observation. It's as easy or easier to lose your shorts in cannabis as it is any other market. In fact, because of its volatility and because you've basically got a highly regulated market with a messy supply chain, you may need to know more about what you're doing than you would in, say, for instance, an early stage tech. Consider it high risk. Definitely don't jump in without a good deal of knowledge. I would say the first thing one should do before considering private placement in cannabis is really understand the supply chain. Get your head around wherever you're injecting your capital, figure out how the product is assembled before and after your capital is in the mix, and be able to tell yourself that story and explain risk factors. There are external risk factors here. There are dependencies everywhere, all right? Your capital could fail because of something that your operators had nothing to do with. So you want to be able to quantify your risk well. That said, there's a pure supply and demand issue on the capital side. I will say that if you're the type of investor that enjoys the kind of things that consumer packaged goods, if that's a category that if you've ever been looking at that space, a lot of cannabis can one-to-one be compared to, it is CPG in many cases. So if you have a CPG background, I think you'd be really, really welcomed into cannabis. You can get metric sets that would just totally make sense. You want to learn a little bit about how cannabis is different. But on the brand levels, if you're up for that high stakes game, there are a bunch of great brands out there that would cut you incredible valuation deals. Also, debt. If you're thinking about looking for high yield debt opportunities, that's probably even more in demand. So it might be smart, depending on how much you were looking to put in. If you wanted to do a blended debt and equity strategy, that's probably a pretty interesting hedge there. What's fun is that you're going to find operators that are willing to be creative. They need the capital, and you can, rather than just kind of take deal terms off the shelf from other sectors, I've seen creative stuff happen that I think is net beneficial to both parties. for instance, debt deals that have interesting warrants or blends of debt and equity, that kind of thing.
My next guest is Narb Alexandrian, a venture capitalist from Canopy Rivers. Great. So what is your updated investment thesis for this sector after COVID? What did you change in your view of the world there?
Yeah, I think a lot of investors are looking at capital-intensive businesses a bit differently. That's a piece that I never truly understood. When I first joined the industry back in 2018, the glamour was writing big checks into companies that had square footage, and the more square footage they had, the more valuation they had. What I never really understood, and now we're really seeing that come into fruition, is that not every square foot is built the same way. Different operators, different energy costs, different environmental factors, political factors in every single facility. So what we're seeing is that there's a lot of companies that are really stuck in the middle. They're neither differentiating with premium quality product, nor are they cost leaders to really push a very value-added product into the market. Now we're seeing how investors are taking a different lens to capital-intensive, big cultivation extraction businesses and really focusing on capital-light businesses such as brands and technology and some of the more traditional venture capital type plays.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.